Good evening to you on the business desk. At this hour, the Organization for Economic Cooperation and Development has lowered its global gross domestic product forecast further. That's from 3.3% to 2.9% this year. The OECD says this is due to trade tensions sparked by U.S. tariffs taking a bigger than expected toll on the world economy. The growth projection for 2026 has also been revised from 3.1% to 3.0%. Chief Economist at Standard Chartered, Razia Khan, joins us to further this discussion. Thank you so much for your time, Razia. Let's first unpack the status of uncertainty brought on by the U.S. tariff plan that has led to the further lowering of global economic growth projections.
Certainly. And the most important point to stress is that we see a lot changing from headline to headline, from day to day. On April the 2nd, we saw the announcement of the reciprocal tariffs, so much more than anyone had anticipated, only for that to be rolled back to allow for time for negotiation with some markets. We see this ebb and flow, the likelihood that there will be time for negotiations and maybe less bad outcomes, and then we see a sudden development and it looks as though we're back in a world of considerable uncertainty. The important point to note is that for many corporates, for many local corporates, as well as multinational corporates, it's the trade policy uncertainty that isn't helping. Even if we don't see the very worst of the trade tariff threat being realized, it's that not knowing how things are going to play out that is delaying investment decisions, that is giving rise to a lot of suboptimal decision making right now. And that is what is likely to exert this downward pressure on global economic growth.
Now, with revised world economic growth, South Africa saw a 0.1% uptick in GDP for the first quarter of this year. What's expected in terms of an impact of these global dynamics on a fragile economy such as South Africa?
So this is the issue. I think most economic commentators looking at the outlook for the South African economy will realize that the Q1 GDP data is somewhat backward looking, doesn't necessarily say it all. We know that investment as part of that GDP print was especially weak. So notwithstanding the fact that there was a more positive performance from agriculture, which had held back growth for so much of 2024, the question is, what can we say about the outlook from this data alone? But the broader policy settings and the context also matter. The fact that we now can look to the impact of recent rate easing by the South African Reserve Bank coming through, that inflation is low and stable, providing a boost to consumer disposable incomes, notwithstanding the fact that the data right now suggests a still weak consumption picture, there is a case to be made for some improvement. What is weighing on everything is this uncertainty about what lies ahead still. US-South Africa relations, the nature of the economic partnership, the ease with which South Africa might be able to maintain some of the trade success that it had seen in agriculture in the very recent past. All of this is uncertain for the moment, so it's very difficult to make sweeping and confident projections about how it's all going to play out.
Absolutely. And on that point of a global dynamic, is there at least some hope where sentiment is concerned of normalization in the world economy with the possibility of eased tensions within the current U.S. presidency?
Well, certainly for South Africa, I think following President Ramaphosa's visit to the US, there has been this greater sense of positivity and optimism that maybe this is an economic relationship that can be built on. Perhaps President Trump will think about attending the upcoming G20 summit, and there could potentially be gains. But it doesn't take away from the fact that the starting point of the economy has been so weak for so long. And we all know the story, years of underinvestment in the South African economy, a very subdued consumer outlook for the most part, structural reforms that are needed in order to be able to drive growth. We're now at a point where I think for the most part, market participants do believe in the upside. Almost everyone anticipates that from a very difficult past position, things are going to get better. It doesn't help that there is all of this global uncertainty affecting other key trading partners of South Africa at the same time. What is the outlook for China? What is the outlook for Europe? There's a great deal of trade uncertainty facing those economies. But for South Africa itself, the important point is if reforms can be built on, if reforms can be deepened, then that does lend itself to some sort of upside to the outlook.
Thank you, as always, for your input. Razia Khan is a chief economist at Standard Chartered. They're talking to us about the latest world economic forecasts.